Alright guys, gonna do the broadening descending wedge for the fractal project. Let's get into it. So we'll start with the guide. Open this up. Alright, this is the cheat sheet for it. Have a quick peek at that if you like. And then here's an example of one actually on a chart. Alright, very clean. What they are is a total of 3 dips. Alright, which will be made up of waves. 1 wave, 2 wave, 3, 4, 5, right? And then 6, 7, 8. There's usually about 8 in total for the entire pattern. Right. Go ahead and choose your Discord username. I'm going to go ahead and choose the top one for now. Ticker, we know this already. It's the one that you're currently doing, so we'll say BTC USD for this one. The date of the fractal formation. So what this does is lets us know when it actually played out. So if we go and find one on a chart here, right, we can see one right in the middle there. Alright, so we'll bring that back to make it look a little bit cleaner or whatever, but there's a pattern, right? So what it is there's 3 dips and it gets wider each time. Right, so it's broadening, right? The word broadening means expanding. So that's how it plays out. Sometimes there's a liquidity grab, and what that will look like is this. Right, and when it finally comes down to this section, this last part, price actually comes under the trend line temporarily before reclaiming it and carrying on. And what happens there is a lot of people's stop losses get hit, a lot of liquidity is generated, and then price reverses from that point onwards. So that's pretty straightforward. Let's turn this music down a little bit, it might be a bit loud. Sweet. Alright, so we choose the date of the fractal. Come back to our fractal. Where are we? Start date, roughly 21st of March this year. And close both of those real quick. Cool. We come over here and we just choose, we go back a month and choose 21. Right, and then time started right now, just 10:30 p.m. Alright, next. Cool. So we've mapped our broadening descending wedge out, and now we're going to cross-reference the indicator profit. Right. So we'll go and apply it to our chart indicator, just profit. Here we go. Cool. Choose the buy and sell signal. Right. Actually, there's a new option on that. So we need to make sure we've got this one here selected so it shows all buy signals. And maybe choose all sell signals there as well if you like. Cool. So we can actually identify the candle just before the breakout was this guy. Right. So we had a buy signal just before the breakout. So we'll go to our question here. Before price broke out, what was the last signal from profit in regards to the what we just ticked, right? These buy and sell. Alright, so in our case here, we've narrowed this down to buy small and large. So small, so the smaller icon, large are the bigger ones. Alright, there used to be a medium, but we've since removed that, and they now share. So this one here was a small buy. Buy signal, small, there we go, up the top, yep, cool. Continuation candles, were they relevant during the formation? Right, so we'll go and have a wee peek here. Turn off buy signals, turn on continuation trend candles, let it load. Cool. So it didn't help here, it didn't help here, didn't help, didn't help. Didn't help. So the answer is no. Alright. Continuation candles. Were they relevant in keeping you in the trade after breaking out to reach target 1? So how targets are found is in the waves. 1. Alright. 3 dips there. Target 1 is the high of this. Right, and then target 2 is the high of that. So in this case, it would be here, this region. Right, we can go by either the candle body or the candle wick. Just whatever you do, make sure you're persistent. And go here as well. Alright, so what we can see here is target 1 was hit, and then target 2 was hit nicely, right? Target 2 was retested. Sorry, target 1 was retested and carried on. Alright, so continuation candles, were they relevant in this section here? Not at all. Alright. So, no. Were they relevant in reaching target 2? No. Alright. Ichimoku. So let's go and load Ichimoku on the chart. Where are we? Back to profit. Ichimoku, turn that on. And we can show TK crosses as well, make our life a wee bit easier. Alright, let it load. Sweet, alright, sorry, just replying to someone. Come back. Alright, was there a bullish TK cross prior to breaking out? The last cross was actually here, and you can see a little orange arrow right there as well. So prior to breaking out, yes, there was a cross. So we say yes. Ichimoku, was price above the Kumo cloud prior to breaking out? So yes. The Kumo was the red part here, or the green part here, right? And it was above the red, right? Yes. Was the cloud bearish or bullish? Right? So was it breaking out on a bullish cloud or a bearish cloud? So in this particular case here, it was actually just above the bearish before the transition into the bullish. The transition is this middle bit here, right? There's a little bit here. Sometimes the transition period it can be quite long, and it's usually the weakest point for price to go for. So you usually see price attracted to these. We'll go here, and it was red on this one. Trend strategy signal. Was there a trend strategy buy signal prior to breaking out? Let's turn these off. Trend strategy signal. Alright. Let it load. Cool. So we had a few here. There's 3 in total before the breakout. So based off the signals, it was telling you you want to begin long in here. Alright. Pretty nice entries there. Yes, there was 3. The 30 VWMA. Hope that these kind of like the 30 VWMA 30 VWMA for instance is helping you guys out. It took me quite a while to figure the 30 VWMA out as a relevant thing to follow. It's helped my trading a lot, so hopefully it's helping you guys. So it was above and had retested here before breaking out. So what was the question? Did price action reclaim the... Yes. Right. Yes, and respected that support as well. Yes, okay, that one's even better. Right, so it actually tested that as support before it broke out of the BDW. You'll probably find that's probably common. ATR, right. If taking the trade on the break of resistance, did ATR 1.0 as your stop loss keep you in the trade? What we'll do is we'll go back through this trade setup. Throw on our ATR, change this to 1, right, and go OK. Let that load. So what we want to be doing is identifying when we broke out, which is here, and then we want to enter here. This is our hypothetical trade. We enter here, and then we use the ATR if it's going to load. Oh, we need to go all. There we go. Cool. So what it's saying is, if we took the entry here, if we longed the breakout of the 4th push into the resistance here and had our stop loss right here, were we safe for the rest of this? Well, in this case, yes, we were. Right, so 1, that's where our stop loss stays because that's our entry. ATR isn't telling you to keep moving your stop loss like this with the trend, right? Because this is a trading strategy, the broadening descending wedge. So we want to get in usually either here or on the retest. and have our stop loss usually below the last low or even down this low, or wherever the ATR recommends us based on your risk appetite or ATR multiplier. So in this case, our stop loss started here, our entry was here, hit our target 1, hit our target 2. Sweet. Because 1 was respected, that means 1.5 and 2 were as well, just like the previous fractals we've just done. However, if 1 wasn't respected, then maybe 1.5 was, right? Mooney. Did Mooney turn green after the liquidity grab or third dip of the BDW before breaking out? So what it's asking is this: if we go into the indicator and turn on Mooney, Mooney is based on moving averages and a volume weighted moving average, which is the 30 VWMA. Right, so it's asking us, once it loads, during this period from here to here, did it turn green? Yes, it did. Right. Green's usually telling you that there's volume coming in, there's momentum coming in, and price should reverse from this point onwards. So if you're taking the trade here, your ATR would have been like somewhere here. You actually got to ride that entire rally, right? From the BDW. So it's definitely a nice confluence part of the indicator for BDWs, because it accounts for volume as well. And when you have this liquidity grab here, this last final dump that everyone gets shaken out, that's when the volume gets usually skyrocketing, which then really helps Mooney out and predicting that trend will reverse soon. Cool, so we'll turn that off, go back to Mooney. Alright, that was yes. Cradle strategy: was the EMA ribbon relevant during the formation of the pattern? So just throw that on. Get rid of that, get rid of this. Alrighty. Wasn't relevant here. Rejected here, rejected here. It's maybe more on the from say like here to here it was relevant. So I'm gonna, what options do I have? I'm gonna say no. Wasn't enough there. Prior to the breakout, the price claim and hold the EMA ribbon. Didn't really hold it, but it did reclaim it. And I'm gonna say no because it didn't hold it. Alright, I lost it. Alright, moving on to the next indicator. Turn this one off. Indicator. Prophets.vip is our oscillating indicator. Alright, let's make that a wee bit bigger. Open the settings. Cool. Prior to the breakout of the pattern, where was the RSI sitting? So let's go and turn RSI on, bull and bear divs, and go OK. Let it load. So breaking out here, this section, where was the RSI sitting? Here. Alright, it was winding up, looking pretty good. It would have been, what, 50 to 70. Cool. Simple. RSI. During the pattern, was there any bullish divergence on RSI? Yeah, there was. Right, the second dip and the third dip. Plenty in that third dip, that's what you want to be seeing. That's showing strength, right? So yes, yes, multiple dips. MFI, right? Where was it sitting? So go back into the indicator, turn that off, turn that on, turn that off, turn that on. Go OK. MFI is similar to RSI, but it's based on volume as well. So there's more divergence here, and then more divergence here on that final dip. Alright, so yes, and on multiple dips. So 50, oh sorry, this is much. Prior to breaking out, we were actually low, 30 to 50. That's a really interesting thing. Cool, something different for once. Usually they're all 50 to 70. Cool, and then our custom oscillator. Bring it up. Sweet. Alright, prior to breakout, where were we? Yeah, 50 to 70. Cool. During the pattern, was there any bullish divergence on the custom oscillator? One here, and one here. So multiple dips, and yes. Cool. Moving average convergence, divergence, which is MACD. During the pattern, was there any bullish divergence for MACD? So what we do is we can actually turn these guys off, and then just tick MACD. Get rid of my autistic drawing. So yes, there was one here, and then one here. Right, so MACD, yes, there was. On multiple dips. Alright, OBV. During the pattern, was there any bullish divergence? So exactly the same thing, just repeat and go to OBV. Right, unbalanced volume. This is also based on volume. Plenty of divergence in the second dip. Right, so there's both in both dips there. Multiple dips. During the pattern, were there any golden peak divergence? Right, so there's different levels. Untick that, and then we come up here and just go level 3. Go OK. Oh, I need to tick that one. Show that. Alright, let it load. So there was one on the second dip, not on the third dip, interestingly enough. Yes, there was level 3. Right, and on the second dip. Cool. But what we can do actually is then go level 4 and go OK. No, we've still got our bottom one, which is good. And then go level 5. Do we still have our bottom one after that? No. Okay, so level 4. We can actually choose level 4 here. Alright, cool. Zone signal. Let's go turn it on real quick. And get rid of that. Where are we? Zone signal. Here we go. Buy, sell. We'll just throw them all on so we can see everything. Actually, no, that's not it. That's not the one I want. That's the same signal as before. We want. Should oscillator buy. Wait, what? What is this? Oh, well. Wait, what am I doing? I'm tripping out here. Where's my zone? Here, there's one. Zone signal. Shit, it's right there in front of me. Sorry, guys. Wasting your time. So we want high on. Zone look back. Go 5. Right. What is he? Is this? Or is it on by default now? I am tripping out here. One moment. That's the signals. Hey, what have you done? So, I assume it's on by default, and that's what you choose to show it. We have to have the golden peak tick. I'm tripping out here. Yeah, it's here now. Okay, so there's just this hasn't been calling any. Or I thought there would have been more. Go for this other 5. Medium accuracy. There we go, plenty now. Okay. Okay, so the high accuracy one gave us the top back here on the 4 hour. Sorry about that. Just catching up. So we actually got a high accuracy one here. But there's a medium one here. Medium one there was pretty relevant. Medium one here got the very top. Alright. Alright. Now we're on. Cool. So let's go back to the body question. With buy sell signals ticked on golden peak level 3 selected, does the zone signal pick the bottom or very close to it of the initial dip? So this needs to be reworded. This will be the third dip. Cool, so that's ticked. Level 3 is picked. There we go. Cool. Cool, let's leave it there for now. We're on level 1. Let's go find our pattern again. Looks like Bitcoin's gonna sell off a wee bit here. Here we go, this is better. Sorry about that, guys. Wasted a couple minutes of your life. So on the last dip here, we got the green, right? The green bar. The green bar is doing its best to try and give you a bottom. And it's done that on the BDW there, that's great. So I'll change the wording of that, and that'll be on the last dip. So that's gonna be yes. Right. Now we want the medium. Oh, that was the medium. Now we want the high. Give it a moment to load. So we lost it. Okay, so come back to our thing here. Wow. That one here on high was a no. On the medium, it was a yes. Right? On this case, the medium was more relevant. Cool. Now we're moving on to Oracle. So we can get rid of that indicator and bring up Oracle. Let it load. Alright. High accuracy order block. The time frame that you're currently on, right? So for me, I've done this entire pattern on the 1 hour, because on the 1 hour that looks the cleanest in my opinion. So did T1 line up with a high accuracy order block? So let's just map out where T1 is here somewhere, right? T2 is here somewhere. So we come up to here and we go to T1 line up with it. So let's go turn the order block on for the time frame we're currently on. So show current time frame. It's gonna make mine black, and that's what we want. Go OK. That'll load. So we need to remember that the order blocks themselves, they update. See how it drops down here and then forms another one here. It's because it can only plot so many at a time on the chart. However, this level is still relevant permanently. Right. So that wasn't really target 2. It was actually before target 2. So I'm going to say the answer here was no. If anything, that P candle here was more relevant. For target 2, which is up here. Target 1 there's an order block here. Right. It only goes to here because it had to repaint down here because of this order block. Right. However, it's still relevant all the way. So that order block was rejection point of the 4th wave here. It was also our target 1. So perfect. Did T1 line up with a high accuracy order block? Yes, it did. Alright, did T2 line up with a high accuracy order block? No, it didn't. Not in this case. Higher accuracy order block, multiple time frames. So one time frame above our current time frame. Was there a order block at working as major support or resistance? So we're on the 1 hour, so we're going to jump to the 2 hour. Just one time frame above. So find the time frame you're on, and then go one and below it. Alright. Cool. Let that load. So prior to breaking out, was there an order block acting as major support or resistance? Right. So just before breaking out, was there a level being played with? So we can go here and be like, okay, well there's a 2 hour level that was tested as support and reclaimed as support pretty cleanly through here before it broke out. So I'm going to say yes to that. Yes. Right. Next one here is 2 time frames above your current one. Same question. So all we do is go back to our time frame. We're on a 1 hour for what we're on, so we go 1, 2 down. So the 3 hours. Was there a 3 hour order block playing key level? There's 2 through here. Right. So the answer again is yes. Even though it's the same one, it's still relevant. Yes. That was support. Yes, support. Did a power candles play a key role in the pattern formation? Right. So let's have a look. There's a large P here during the pattern formation. There's also a large P here. So we could say this P, even though it was not in the pattern, is where price rejected initially. Alright. This P here, alright, failed to break above this P. Push us down. We came back and rejected at this one. This one here we also rejected at. Alright, rejected it over here as well at the target 2. This one's irrelevant until here, and then it was relevant. This one was relevant once we flipped it back into support. This one here, we can say that underneath it was the accumulation period, right? Did the inverse head and shoulder here? All at the bottom of this pattern. So I'm going to say yes, these were relevant during the formation of this. Alright, support and resistance. Alrighty, this is the interesting part. I'll clean this chart up, get rid of the indicator. Alright, I'm not going to draw it in, just so the fibs look a bit cleaner. You guys know where that BDW is by now. From fibbing wave 1, where did wave 2 reject? Okay. So, what I might do is just use this tool real quick, and just up here, alright, draw the waves in. Usually something like this. And we'll just quickly, that's wave 1. Wave 2. That'll be wave 3, 4, 5, 6, 7, 8. Right. So just quickly change these, just try to make this as easy as possible for you guys. Those ones can be relevant, so we can fuck them off actually. Cool. So you've got 5 waves down. 1, 2, 3, 4, 5. Our question is, fibbing wave 1, where did wave 2 reject? So you take your fib tool, right, fib retracement. You find your wave 1. So we're going to start from here. This initial dump candle here. Come down to the bottom of wave 1. Alright. So what this is wave 1. Wave 1. Okay, we come up. We didn't quite touch that 786 here. I might just try and make that a little bit tighter, just in case it may. No, cool. So we didn't quite reach the 786, so we actually rejected the 618, okay? So the first dip, we rejected at the 618. So fibbing from wave 1 to 2, or you could just say fibbing wave 2, where did wave 3 end? Alright? So what we want to do is delete that, and then redraw from the low of wave 1 to the high of wave 2. And we'll just drag it across. Where did it bounce? Where did it finally find support? So we can see here, once it loses the low, that there was 3 levels of support on the way down. It's the 1272, the 1414, and the 1618, right? And we got support off the 1618 before we bounce back up to the 382 here. So gold to gold. So we come in here and we go 0618. Just depending on which way you've drawn it, it'll be either 0618 or like, sorry, it'll be either negative 618 or 1.618. Just go off the golden, go off the last 3 numbers. Don't worry about the front numbers, because we're able to work out, because it's a universal fib that I use anyway, and that you guys should be using. Then it's easy to work out what it was. Nice, nice. Cool, beautiful. All right, get rid of all that. Let me just get rid of the fibs on the chart. Body lines. Oh, Jesus. Delete that, delete this, delete that. Cool. Alright. Fibbing wave 2 to 3. Where did wave 5 end? Okay. So we go find wave 2 to 3. So there's this one here. From the low to the high. Alright, and then bring this across. Where did wave 5 end? So that's wave 1, 2, 3, 4, 5. 5 ended at alpha 618 again. Alright? You guys are now learning my secrets to this pattern, these golden ratios. Alright, the 618. Just remember the last 3 numbers. Ignore these front 3 numbers. So the front zeros or the ones or the minus ones. Alright, Fibonacci retracement. Fibonacci wave 3. Where did wave 4 reject? Alright, so delete that real quick. Delete that. So wave 1, 2, 3. So we want to fib wave 3. Where did it reject? This time it was cleanly off the 786. Very cleanly. Alright. So 786. Or 775 if you're using my exact ones. As well as 786. Fib wave 4. I need to delete that. It's a double up. Fib wave 4. Where did wave 5 bounce? Alright, so we'll just delete this fib again. We know that this is wave 1, 2, 3, 4. Alright, wave 4. Wait on. What do we got here? Fib wave 4, where did 5 bounce? That's the 618. What have I done here? Fib wave 3. Oh, that's a double up here, okay. But that seems like a double up already of the previous one. Fib wave 2 to 3. Oh no. What have I done here? Here we go. That's what I was chasing. I front run my own questions. Let's quickly just flip back. Alright. So fibbing wave 2 to 3, where did wave 5 end? Alright. So wave 5, this is fibbing here. And because we're using my fibs, it's telling us that this is where support is. Alright, bounced off it. It's telling us where our next level support is. That's fucking really clean. That's so clean. Holy shit. That was a perfect BDW. So I had to add some more here. Some more numbers. Some more extensions. Because this is actually the 1618 or the 2618. In this case it's the 2618. Right, so it was still relevant. Golden pocket. Have to update those questions. There'll be more options here. But you guys get it so far, right? Here we go. When fibbing from the top of wave 1 to the bottom of wave 5, did T1 and T2 line up nicely with fibs? So if we go ahead and delete the fibs on the chart. So what it's asking us to do is go from the very top up here of the pattern to the bottom of the pattern. Right. Target 1 is here. So that one did line up. This one, no. No, it didn't. We go no, because T1 is pretty more important than T2 in this case. I'd like to see them both line up. Measuring wave 5 with the fib tool, did the trend break also line up with a golden fib ratio level, right? So what we do is delete that. Wave 5 is this last big dump down. We want to measure that, right? Make sure we get our trend line drawn in. And we've got here the golden ratio 618 is also where it's flagging and breaches resistance here. Right. We could do it this way where it retested. Right. Whatever. That's the 618 that's relevant. Yes, 618. Measuring wave 5 of the fib tool, if there was a retest, was it also an SR flip of a golden ratio? Right. So it was an SR flip. Alright, so it was resistance at first, became support, then became support, then resistance, then support. So it flipped that level cleanly and then carried on. The retest is also retesting as well. Alright. So if there was a retest, which there was over here, which is what we want, was it also the SR level of golden ratio? So yes it was, and that was the 618. Mission moves was target 3 reached. Alright, so target 3 is a rare one. I'm just gonna get rid of all this. Just gonna delete everything on the chart. Target 3 is this dip here. That whole dip from the point of the retest of that here, right? So we haven't reached that yet, but that should be a level that we're interested in. I'll show you an example of that actually that's relevant, just so you guys can learn, because might as well take 2 seconds to show you and teach you guys something. The log here, this one here. So this was the big BDW of COVID, right? So the entire COVID dump ultimately was just one large bump and run, or one large broadening descending wedge. Target 1 was here, right? Target 2 was up here, and that's exactly where we rejected on both those. Right, straightforward, rejected there. Next one, right, rejected here, right. There was one more target, and that was this large dip from the point of retest here, right, and then we just draw to the right, and look where we topped out, right, before we fell over. Oh. Right, pretty much gives you the top before the reaccumulation go again. So just using that logic, we'll go back to where current price is. Beautiful, beautiful. So we haven't reached that yet, so in this case, no, it was not reached. Trend line was diagonal resistance clean, right? Sometimes it can be a little bit dirty, like all other patterns. It's a bit of an art form, but in this case, it's pretty fucking clean, to be honest. So, nice clean touches through here, nice retest. Right, beautiful, beautiful. Can't ask for more. Yes. Was diagonal support clean? Alright. Go for here, go down to here. 1, 2, 3. Nice 3 clean touches. So if we get a liquidity grab, if price comes underneath this temporarily and then reclaims and carries back on, like COVID's large one, right, that'll still be clean as long as this is clean, that's clean, and then the break and then reclaim is clean. Does that make sense? But if it's like a bit choppy through here, a bit choppy through here, and a bit ugly through here, but there is the overall pattern there, then that would be a not so clean one, right? Was diagonal support clean? Yes. Was the breakout clean? So just bring it back to here. When we broke out of this body thing, alright, we flagged perfectly at it, as we should with a BDW, because they look like this, right? And you get that little last one played out perfectly, and we broke out cleanly. This is a perfect, literally a perfect BDW. This is what textbooks should be basing their kind of information off. So like the 618 golden pocket down here, when we had overlaying different variations of fibs, all saying this is going to be the bottom, with a perfect accumulation pattern like this, then that's a win. Yes, it was. Trend line, was there a retest? We already know there was, yes. Not technically, but yes. So this is when it's like, let's say for instance, like this here, for me this is clean enough, right, because it's right here. But let's say for instance, it went up like this, hit target 2 or something, and then came back down like this, and then carried on. So I could probably call that a retest, because on a horizontal level, it would have retested, right, previous high. But if it like bounced here and then carried on up, then I wouldn't call that a retest, right? So if it was longer and more drawn out, but still came back to the horizontal level and bounced, then I'd be interested. So this one was a yes, but there's some other options there for you as well. On the third dip was a liquidity grab, and that is just when price goes underneath the trend line temporarily, right? So in this case here there isn't one, but it usually does something like this and then back up. Some kind of double bottom, some kind of, it could even be a broadening descending wedge in this last dip. Have any played out recently? Not what I can see. Alright. No, there was not on this one. Was there a large influx of volume on the last dip, right? So liquidity grab or not, we want to be cross-referencing volume. So let's say, for instance, it was a lack of volume and no liquidity grab, then we want to be cautious. We want to be like, well, hold on. The whole point of this pattern is to shake people out. But if no one sold down here, then there's no liquidity to throw up. So in this case, what we can do is cross-reference dip 1 is here, right? Cross-reference dip 2, which is here, there. So dip 3 was fucking much larger, right? Big shakeout. So, bloody oath. So even though there was no liquidity grab, there's a huge influx in volume. So this can help us, once we get enough submissions, work out, is the liquidity grab necessary if there's a large amount of volume? And then was target 2 or target 3 reached, even without the liquidity grab, by breaching trend, if that makes sense. This is going to help get some good data. On the third dip, yes there was. Was wave 2 a rising wedge? So because of the patterns here, because of the larger pattern that's playing out here, because there's more than just a simple triangle, right? There are patterns within patterns. So look at this here. This is just a falling wedge but inversed, alright? This is a rising wedge. Tried to break out, rejected, see you later. Which had a bear flag target, right? Oh shit, wrong tool. A bear flag target, just the same as a falling wedge would, which, sorry, from the point of break here, it literally gives you the bottom. So the bear flag paid perfect, right? Easy. So on wave 2, which is the incline, right? There was a rising wedge, yes in this case. Was wave 4 a rising wedge, which is this guy here. So I wouldn't recall that a rising wedge. This looks just more like a standard bear flag, or if it was inverse, like a bull flag, right? So when price does this, that is just really some kind of horizontal down channel that gets breached and boom, see you later. So that's what played out here. So I wouldn't call that a rising wedge. That was more of a bear flag. Alright. No. During wave 5 and 6, did a pattern form to create the bottom, right? So this is wave 5 here. This is wave 6. To create the bottom, did we have a pattern here? So we've got one here. This is the, it's a little bit sloped, but it is here. The inverse head and shoulder, right? So yes, was there a smaller broadening descending wedge, an inverse head and shoulder, which is ours, or one of the triangles, or a cup and handle, and go from there, alright? Was wave 6, even if hitting targets, a broadening ascending wedge. So wave 6 continued, so we zoom out a wee bit. And we draw in our broadening descending wedge here. Right. So when this wave 6, or the continuation of the breakout, this direction, did it become a broadening ascending wedge? Right, did it come up, come down, come up, come down, and then go again, before rolling back over again anyway? Because when the market is choppy, you'll find that that plays out quite often. It'll go from one pattern of accumulation to a second pattern of distribution. Alright. So if we can try and find out if that was a thing, then that can help us maybe find out what markets do after the complete choppy market practice that they do. So wave 6, in this case no, it was not. Alright. Grab our screenshot. Oh, wrong one. Go copy, and then just throw that down here. Time finish, we started at 10:30, so it's now 11:07 PM. And then we go submit, and then we're done, and that's our one done. These are going to be harder to find, guys. Take your time, don't rush this one. Master this pattern if you can. Like, while you're doing this pattern is probably what made me most of my money. It is an amazing pattern because no one is, well, not no one, but a lot of rookies in the market, they don't quite realize this third dip is where you meant to buy and not puke your bag, right? So on the 15-minute, we go just to here and go to the 5-minute. I can see one right here. All right, so you've got one here. Just gets wider and wider as it comes down. It's a bit ugly. See if we can clean that up a wee bit. There it is. It's somewhat there, right? So our nice little small dip, a bigger dip, and then an even bigger dip, right? A lot of wikis. There'll be bullish divergence there on the RSI indicator. Target 1, target 2. Alright. So it's cool. We get a broadening ascending wedge in this one. Target 1 is hit there, and then target 2 here. Right. We might even have a target 3 there, so we'll just grab that target 3. Down to the bottom of this one. Come up, I'd say from this lower high here, and then that'll be... Alright. We may not get that last target, but target 1 and target 2 have hit. Can't remember whereabouts we are on the chart. Probably not. Alright. Target 1 and target 2 hit. Take your time to learn this pattern. Don't rush it. You'll find them on lower time frames quite often. The 5-minute time frame is notorious for them. With the 30-minute 1 hour, you'll see them. And it's usually a continuation pattern in a sense, or a reversal. So by continuation like this, right, trend is up, but when it does finally get a little bit of a pullback, it comes in the form of a bullish accumulation pattern, right? Cool. Alright, we'll wrap this video up, guys. Get submitting, take your time, and awesome. Cheers.